Good morning, everyone, and thanks so much for joining us on this Sunday morning. The growing percent of the population getting vaccinated is already prompting the relaxation of economic restrictions here in Massachusetts and in other states. So what will the post-pandemic economy look like, and how can investors and managers navigate it best? That's our focus this morning as we speak with Babson College lecturer Peter Cohen, a teacher and writer whose latest book is entitled Goliath Strikes Back: How Traditional Retailers Are Winning Back Customers from E-commerce Startups. So earlier this month, Governor Baker announced the state is hiring an outside firm to study the pandemic's impact on the way we live and work, including subjects like the permanence of remote working habits. What do you see as some of the headlines we'll be seeing in the post-pandemic Massachusetts economy?
I've written a couple times about this idea of a sideways W recovery, by which I mean that there are some companies that have done spectacularly well, have been much better off because of the pandemic. There are some that are in huge trouble because of the pandemic. And then there are some in the middle who have repositioned their business and are now doing much better than they were before because they were able to change what they're doing to benefit, take advantage of the needs during the pandemic. The real interesting question to me is, how all these companies are going to take advantage of what I call the roaring 2020s. The statistics are extraordinary. The amount of debt paid down, the amount of increase in the bank statements of people who have not been spending money, people who have jobs, who are fortunate to have jobs, those people are basically like a whip ready to uncoil. As soon as they can get out there, they're going to be doing all the things that have caused part of the economy to get killed. Anything having to do with being socially close together will suddenly become hugely popular and will experience a huge increase in sales. So, cruise ships, airplanes, restaurants, concert venues, sports, all those things that people have been missing doing will enjoy a huge increase. So the companies that are providing those are going to suddenly find themselves needing to hire people, needing to raise capital to meet all the demand. And that is going to create just an outpouring of spending.
One of the biggest local stories, business stories of 2016 was General Electric's decision to move its headquarters from Connecticut here to Boston. Barely 3 years later, GE was a shell of itself. CEO Jeff Immelt, who quarterbacked the move, is long gone. And in a recent Wall Street Journal profile, Peter, he admitted he completely misjudged the way out from under the corporation's problems, admits he wasn't prepared to deal with the crises he faced. What does your research tell us about the type of leadership that's going to handle what we're going through now best?
In my book, Goliath Strikes Back, I wrote about 3 CEO mindsets. And the one that is going to get us out of the mess is the kind of CEO that goes into a business that's in trouble and turns it around successfully. And that's what I call a fast follower mindset. Somebody who can come into an organization, identify the opportunities for growth, and manage the business in such a way that it captures those opportunities and achieves a turnaround. The best example that I have that I wrote about in the book, Toast is a Boston-based company that makes software for restaurants. In February of 2020, I interviewed the company. They had just raised $400 million, and it was valued at $4.9 billion. It was poised for an IPO. 2 months later, they laid off half of their staff, and their revenues were down 80% because restaurants were shutting down. By the middle of last year, revenues had come back because they were able to reposition their business to help restaurants do 2 things. First of all, people would order online and pick it up at the restaurant, and they're also selling gift cards. So their software was so flexible that they were able to kind of figure out what restaurants would need and help them survive. Last November, they did a secondary offering that valued the company at $8 billion. And on Monday, on the 21st, they announced they were going to do an IPO, and the Wall Street Journal reported it would be worth $20 billion. This kind of ability to adapt really quickly to challenges is clearly something that Toast has in its DNA.
Speaking of business models, we're going to take a break in conformance with our model, and we'll be back with more with Peter Cohen of Babson College in just a moment, so please stay with us.